The another set of good numbers that came in was from Bajaj Auto. Rakesh Sharma, joint MD of Bajaj Auto, joins us. Rakesh, hi. Give us a sense. Your exports are driving your growth. What is the kind of pathway that you see for exports going into FY27?
Good morning. Yeah, thank you. I'll come to exports, but there are three segments which I would like to sort of highlight, which are driving growth. One is, of course, as you mentioned, exports. The other one is our electric business, which is now 30% of our domestic revenues, both in two-wheelers and three-wheelers. And then the third one is the high-end bikes, the 150cc plus segment, which have outpaced the industry by almost 1.5 times. So the top line performance, which you see, is the combination of these three really doing very, very well. When it comes to exports, yes, I must say that demand in places like Africa and Latin America has been unusually resilient to the crisis which is being faced. And our competitive positions in both these geographies are strong, which helps us to grab a disproportionate share of the growth which they are experiencing. However, logistics, supply chain, these things have really been very difficult and have, I would say, impaired availabilities. I think in the quarter, we could have hit the 1.5 million mark, but we could not manage the logistics and the supply chain and fell short by about 120,000. So yes, going forward, demand for exports, our view is that it is strong. Customers are coming into our showrooms. We have to manage supply chain and logistics opportunities to continue to breach the 250,000 unit per month mark.
Rakesh, do you see the challenges continuing in Q2 as well? Given the fact that we still have escalation now coming in again in West Asia, supply chain, logistics cost, is that the challenge that will be there in Q2 as well?
Well, I must say that the April, May was very severe with the LPG shortages. A lot of production got disrupted with our vendors and with us. And then there was, of course, if you remember, a lot of manpower migration, which was going back and forth, elections, etc. So all that was now that part has eased out, I must say, and the wheel is moving a little bit better. But I would certainly say that the logistics, international logistics, are still a matter of concern. Shipping opportunities are very few. We are a very, very large operation now with 250,000 units per month, 750,000 units per quarter. It's amongst one of the largest containerized exporters of India. And therefore, logistics is a very important area to manage. Now, here it's very difficult to say how things change. Things are changing, not just weekly, but every second, third day, shipping, cost of shipping, etc. is changing. So very difficult to give a comment till the time this whole West Asia thing doesn't, settle down convincingly. I think we will have to live with this uncertainties and learn to manage them.
Is the margin band of around 21% steady state band for you in FY27, given all these challenges?
Yeah, again, coming in at about 20.9 was great. There was inflation, but we recovered almost 50% of the inflation through price increases right in the beginning of the quarter. And then that the dollar strengthening against the rupee has been beneficial for our realizations. So that offset a lot of that issue. I think that trend should continue. But I don't know whether we will get that kind of further weakening of the rupee, given everything which the government is doing to ensure that the rupee doesn't slide. But yes, some benefit will be there from the currency side. Inflation is there. But again, inflation is almost a monthly story now, because earlier one used to settle things on a quarterly basis. But now some of these costs are being settled almost on a monthly basis. So again, it's very difficult to understand where exactly it is going to land up. But having said that, on an internal basis, um, because we are getting better operating leverage, we are making, thanks to the product innovation, we are making better money in our electric segment, which was not making enough money, but that has now gone into double digit EBITDA. So those are the positives. So therefore, when you put all the positives and negatives, our attempt will of course be to be best in class and continue to manage the margins. But it's difficult to give you a precise number as to where the chips will fall.
The premium bikes, Rakesh, you've done well in that segment. That's likely driving the margins also higher. But give us a sense on price hikes. You've said half of it has translated. The other half, how quickly does that get translated to the consumer? And therefore, how should margins evolve? If I were to push you to make a guess.
So, last quarter, like I said, we took about 2.5%, 2% price increases, which was about 50% of the inflation which we faced. And rest of the recovery was from the better realizations on the dollar, uh, very, very strong control on discretionary costs during the month. And of course, the operating leverage we got from higher volumes. We will continue that same way. We will calibrate our price increases to the RM cost inflation, as well as monitor what competition is doing. So, the whole idea is that the playbook is not going to change. It's just that the environmental inputs are going to change. So, we will look at passing on price increases by factoring in how much raw material cost increase, and that's happening on a monthly basis, how much we are going to realize on the dollar, and which parts of the company are growing. So the whole idea is to manage it very dynamically. It is not possible for me to give a number which I can be very, very convinced about. But we are, if you see the last several quarters, we are a company which is way ahead of the pack, and we are operating at the 20% plus levels. Now, exactly how.
All right, Rakesh, sorry, I'm going to have to cut you off there.